Hi, this is Gary Sandlund coming from the CME Group to talk a little bit about what's taking place over in the agricultural space as of late. And today we had our quarterly stocks figures and acreage figures from the USDA, and we had a complete reversal of what, or not a reversal, but a continuation of what we already sort of knew. The corn acres came in actually higher than what was expected, back at 97.3 acres. So that's a lot of acres that we didn't think we were going to have. The expectations were closer to where that 95, 96 million. The stocks numbers down to 2.7 billion for June 1, which is pretty snug for this time of year. We have a quarter to go, and the usage rates would project that we have a carryout down back near 600 with those types of figures, which make these spreads extremely dynamic from the July SEP versus the DEES. And what we saw from there today, these spreads moved anywhere from 30 to 40 cents off of those figures. Beans, exactly the same scenario. Bean acres were big at 77 plus million acres, and the stock side of things at 435 as of June 1st, which would project a carryout figure somewhere around 100 million by the end of the year, which is extremely tight for the USDA even to put that in print. So it's one of those things that these spreads like July, August versus November will continue to be extremely volatile, again like what we saw in corn. These spreads moved in beans 30 to 40 cents today as well. I don't expect to see that any changes anytime soon. It's too late to import anything from South America. The time frame just doesn't work anymore, so what we have now between now and September is what we're going to have to use, and we're going to have to ration some pretty significant quantities to make it to the new crop side of things. On the flip side, down the road, everything looks pretty bearish right now, considering that weather is near ideal. And if we do indeed have these many acres, the corn production figures are going to be back above 14 billion. Beans are going to be 3.4, 3.5 billion. So we're looking at a surplus down the road from new crop beyond. Wheat, unfortunately, is still dealing with a lot of the global issues, and again, it's a glut of wheat around the world, and that's really the face of it. And it's still highly priced versus corn when you go out into the back end of things. So wheat versus corn, wheat still looks pretty expensive. So going forward, obviously, weather will be dictating things from here forward for new crop, and obviously we'll see what the weather brings us during June or July and August. Those are the two critical months. But if patterns continue like we have, expect to see lower prices going through this late summer and into the fall.